Good day. Ira Epstein with your Agriculture Wrap-Up, and this is for Wednesday, the 22nd of April, 2020, and the time right now, well, we're just after 4:30 p.m. Central Time. So as you can see, a green day in the stock market. Metal market's a beautiful rally day. Dollar up a bit. Bonds and notes, well, they were down a little bit today. And you have a mixed day in the grain markets. You had the beans up a fraction. I don't call that very much. And I was disappointed that China had bought 198,000 metric tons. It's not that much. Where's the big numbers that they're going to do? Corn, though, got a real solid bid today at the expense of the wheat market. So when we look at the bean market, we had hit the lower Bollinger Band 2 days ago, and the market's spun around now. So the question is, what does that mean? We're still in this pattern of down. For the week, at least at midweek, we're up 2 cents, and this is a close-only chart on a weekly basis. You can see it was yesterday that you came down and you hit these key numbers, and you had a nice bounce from it. Now, market, is it rejecting these lows right here? Well, I think it did reject them, but everything comes back into play if today's lows are taken out anytime soon. So you've got to keep your eyes on that. That's a number that should not be violated. What I think the market's doing now, when you look at the swing line study, you have a pattern of a higher high and a lower low. So you're getting a reactionary bounce, and we're going to look to see where the next high comes in on the marketplace. A tip-off might be where the 18-day average of closes is. It's right now at 860 and a quarter, and it's falling at the tune of about 2 cents a day, so probably closer to 858 tomorrow. Wouldn't surprise me if that turns out to be a resistance zone in the market. Not a sell zone, a resistance zone in the market. What the market did bounce away from is the first challenge of the lower Bollinger Band. You got a nice bounce. And remember, you'll trade within those bands 95% of the time. The second thing that happened is the market lost its downside momentum. So if we take a look at this market, and this was yesterday. So let's count together. This is Tuesday. Both numbers under 20. Both under 20. Both under 20. So you can go back your 3 days, and then what happens today? Today you lose the number, and you lost it in a pretty good way. You're almost up to the 30 level. The odds favor if this market can't get it back tomorrow, that I'm talking getting that red number under 20, and the odds are not strong because it rallied so much today against it, that price and this 18-day average are going to make a run at each other, and from there we'll get an idea as to what the next leg of this market's going to be. When I come to the meal market, here too, I'd be very cautious. You're knocking on the door of trying to get over that lower the slow stochastic coming over that 20 level. And if it does so, momentum tells you that price is lost its downside. You've been in a downtrend. I would say you don't want to see this 298.80 level taken out. If you take that out, the odds are strong. You're going to make a run for this 301.5 zone, and then we'll try to figure out between that and the 18-day average, if that occurs, what's the next step in the market. Right now, going home, the bears are still in control. So when the market reopens tonight at 7, I'll be looking to see, does it still keep the embedded reading as it start losing it, and what number in evening trade might cause it to get back to embedded. In the soy oil, you yesterday got under the lower Bollinger Band. Today you're right back into it. That so often's the case, especially when you're oversold. And I define oversold on the slow stochastics as numbers that are under 30, not both numbers trying to get under 20. So that's oversold. And you're getting a bounce, not a trend change. I would be surprised if the bears, if you can get away from being oversold, don't ultimately look back at this 2692 level, about 100 points higher, as a resistance point. In the corn market, you should be out of corn shorts if you're a trader that follows slow stochastics. It lost its embedded reading today. This is how the market looked coming into today. It hit the Bollinger Band the first time. I said that's where trade, and I said it yesterday, I'm sure, that's where the traders often take money off. Now, if it doesn't get it back, you're setting up for a challenge of wherever that 18-day average is over the next day or so. That is the target. Now, it doesn't have to take a day or so. It can take longer, but that is the target. This market would have to re-embed, and on this close, it's going to be very hard to do so because you're already up near the 28 level. In the wheat market, you've got a pattern of lower highs and lower lows. So how do you play that? Well, the bearishness is here. You can see the resistance. You even challenged it today on the bounce back into the 100 and the 18-day average. So this is the zone, 546.5 to 547.75 is the resistance. I don't like that you got to risk 13 or so cents in the market. That's a little too big of a risk, but I do think the bears are controlling this play. The question is, can the wheat break? Is the other markets, if they do get a rally in the beans and the corn, can that break? If it does, 531.25 is the target. Sugar market hit yesterday the lower Bollinger Band, and you're trying to get away from it. This is so oversold, and not trying to embed. It's one of these markets that I'm very careful of. You know, I'm just looking at it, but I don't think that I would tell my clientele to do much in it. And the reason is oversold, just drifting. There's other areas. In the coffee, the market is oversold, hit the lower band yesterday, riding it today, just sort of sitting on it. Both numbers not under 20. Nah, I'll let somebody else have that trade. But something did happen here. Now, let's take a look. Watch the red and the green lines. The 18-day average in red, the green's the 100. Yesterday, you had a bearish crossover. You haven't quite taken out that low. You often do when you get a bearish crossover. I'll be looking to see if that's the case tomorrow. In the cattle market, the battleground is, I think, crystal clear. It's the 18-day average of closes. We have a pattern of lower highs, higher lows. You're just honing in on that number. Momentum's not helping us. If the market gets under 82.10, the bulls give up. At that point, you're back into a downtrend, 79.30 area. That looks like it could be the support zone. If the market can get up and get over the 88.12.5 zone, well, I think the bulls grab control, but the risk on that is 6 cents, too much to play with. Also got a cattle on feed report coming out this week. I think it's Friday. They're looking for big declines for the feedlots. As farmers, now that we're into the spring, they can, and ranchers, they can put out their animals on pasture land. That's what they're going to have to do. Everything else just isn't there. Tyson today closed its plant in Waterloo, Iowa for pork. So you're just not getting the packers bidding on these animals. And that's because of COVID-19. In the hog market, while you're backing off, you lost the embedded reading. I am looking for price in the 18-day average to get together on this. So I'm looking for the market on this break to find buyers to try to drive the market back up to that particular level. I want to remind you, I know a lot of you trade spiders and ETFs, and I don't know if you're aware of it, but I publish my spider ETF report daily around 4:30 in the afternoon, and from that report, what I cover are 27 different charts on the ETFs and the spiders. So it's a little bit of everything. I cover the most popular ones. I throw out what I think are pretty solid trade ideas. Solid being I give you reasons for them. Not that they're going to win. I wish I could tell you they were going to win. Nobody knows that. You know better than that. But I do talk the fundamentals, what's moving the markets, what's going on, the chart action that's in it, where I think the market will go. And you remember, when you trade ETFs and spiders, you have to have a little bit of a twist to it because they don't open till typically 8:30 in the morning for the public trading. And we've already been open in all the stock indices, the interest rate sectors, the energy sector. So it impacts these markets, the metal markets. And I tell you how I'm looking at it in the combination of my morning futures video with this. I think that's the package. So if you're interested in these particular markets, you might want to take a good hard look at what I'm doing. It comes out, as I said, in the afternoon. You can go to our website at www.iraepstein.com under the word research when you get there. And it explains everything about it, how it all works, and so on. I'm going to do another video for you on that, so when you get to the website, you'll be able to understand that as well. The cost, and there is a cost for that, $8.95 for the first 30 days. You get my special reports as I put them out, our handheld application. So if you have an Android or a Mac, an Android or an Apple phone, it works on both. There are no Mac phones, but it'll work on that as well for you, and you'll get a push notification when I put things out. Again, www.iraepstein.com under the research section. It's real simple to sign up right there. I'm Ira. You have a great day, and I will see you all tomorrow.